afternoon, everyone. Hello and welcome to today's session of Indonesia Property Market Update for the second half of 2021, Occupiers session. Before we start our webinar, we have a few information in regard to our webinar session today. The audio and video for webinar participants are being disabled to avoid noises, and we will only enable audio and video for panelists. This webinar is being recorded, and we will share the recorded file and presentation slides tomorrow. We will have a Q&A session in the end of the webinar, but please feel free to type your question in the question box below. And although we may have a limited time to answer to your questions, both in the registration form or today, we will send the unanswered questions to your email inbox. If you need any help with the webinar, please type your question in the chat box below, and our webinar host will help you. Along with the recorded version tomorrow, we will send a survey link for you to fill. And we hope that you can free your time to fill out the form so we can have a feedback from our attendees. So to start this webinar session, I would like to introduce you to today's presenter. The first presenter is, we will have a keynote speech from our Managing Director, So sorry for there's a problem with the internet connection, but so for today's speaker, we will have our keynote speech from Bapak Mike Broomell. Unfortunately, he will not be able to join in person today. We have a recorded version of his speech today because he is now, in fact, in his flight to the United States. And then we have Bapak Ferry Salanto as the head of research today, Bapak Bagus Adikusumo as the head of office services, Bapak Halsema as the head of retail services, and also Ibu Lenny Es-sinaga as the head of residential services, as well as Pak Rivan Munansa as the head of industrial and logistic services. So I guess without further ado, we have a video of Bapak Mike Broomell keynote speech for you to enjoy.
Good afternoon, everyone. Welcome to our Colliers biannual webinar for occupiers. Today I'm sharing my brief introductory comments with you through a recording, as my flight to the US was unfortunately rescheduled to take place at the same time as this webinar. You will shortly hear from our team of professionals who will speak to you live, and they handle a variety of asset classes. We will present the property market updates for office, industrial, retail, and residential for the second half of 2021. And our experts will share with you their points of view regarding topics that impact the property types in which they specialize. As you might imagine, it is difficult for us to answer a question which we are often asked: how is the property market doing? Of course, it depends on whether you are a property developer, an investor, or an occupier. And also, it depends on the type of property. In general, the property market is a favorable market for tenants and investors who wish to purchase property. Of course, the variety of asset classes has been impacted differently by the pandemic. Most have struggled, but some have thrived. Logistics warehouses, data centers, and landed housing have all understandably benefited from the growth in the e-commerce and working from home environment during the last 2 years. Over the last couple of months, and despite concerns about the Omicron variant, we have witnessed encouraging signs of economic recovery, which bode well for a healthier and more balanced property market going forward. Nevertheless, we do believe it will be a tenant and buyer market for the next 1 or 2 years as developers and property owners are faced with an oversupply and or suppressed demand. Even though the economy will likely be improving in 2022, we are hearing predictions that there may be an increase in the number of distressed assets coming onto the market as lenders and vendors push to collect monies owed to them and which remain unpaid. This is obviously bad news for some, but good news for others. I hope you will enjoy today's webinar and trust that our experts will give you insights that will benefit you and your company. If you have any questions, please do not hesitate to reach out to me or my colleagues. We look forward to speaking with you further. Thank you.
That's the video of Pak Mike for his keynote speech. So I think we can start and move to our first sector, which is office market. And we already have Bapak Ferry Salanto as the head of research, who will explain his point of view in the market, office market in the second half of 2021, and followed by Pak Bagus, who will also explain about the market updates and also his opinion on the opportunities of the office sector in 2022 and moving forward. So Pak Ferry and Pak Bagus, over to you. Thank you.
Thank you, Auntie, for allowing me to explain the situation of this office market in Jakarta. So as you can see from the left chart, for some periods, office sector has experiencing an oversupply situation, and it is likely to continue on in 2022. We continue to see a downward trend in occupancy, which already took place since 2018. And this situation has been created what we call tenants market situation. This is a condition where market favors tenants, particularly because the option to get good quality office space with a competitive rent is wide open. We still anticipate a further drop in occupancy next year, particularly because the projected influx of substantial office space next year. Supply addition become moderate from 2023 onward, and even we do not get any confirmation of new office building to be completed in 2024 and 2025 in the CBD. Go to the next slide, please. Okay, now we are talking about the rental tariff and selling price of strata title office market. We see that the similarity in trend between base rent and occupancy. Since 2017, we see continued drop in the asking rental rates, which will likely to hit its bottom at the end of this year. However, we expect to see an increase in rent next year, mainly triggered by the influx of new buildings being completed in that year. And they are basically good quality building with rental rate above market average. In terms of strata title office price, it has been relatively stable for some years, but in 2021, we noted that asking price has been adjusted a little bit. Again, the actual transacted price should lower than this. Unit owner and developer are now willing to grant attractive discount of more than 18% from the original price. Thank you, Andi. Over to Pak Bagus.
Good afternoon, everyone that has joined our webinar. I would like to cover some market updates about office happening second half of 2021. For those of you who probably have joined our webinar in first half of 2021, we already said that the office market is oversupply. And in the second half of 2021, the oversupply situation is continuous. Unfortunately, we also continue to see rent and occupancy rate continues to fall. And then for the second half of 2021, the rents that we have done any transactions have dropped from 20 to 45% from the asking rent, depending on the size of the space. The larger of the office space of the tenant stake, the larger the reduction of the rent between achieved rent and the asking rent. As Pak Ferry has mentioned, the market now is in favor of the tenants. So definitely the tenants market continues, and it is an opportunity for occupiers, for tenants to achieve a more competitive rent, either for relocation or for renewal. Now, what has changed between the first half 2021 to the second half 2021 is that in the second half 2021, especially for the last few months, many companies have increased confidence about their business. So the last few months, we start seeing more and more inquiries, demand for office space. And then this, we believe, will likely to continue in 2022. So this is actually a good sign. Who are the major occupiers for office space right now? Still dominated by technology-related industry, consumer products, logistic business, some are telecommunication, and government-related companies. They have become the major occupiers of office space. Next slide, please. Now, discussing about strata title, in the second half of 2021, we start seeing certain owners start considering selling their strata title building or strata title space at a current market price. And the current market price, based on our recent evidence transaction, have dropped around 18 to 30% compared to the pre-COVID prices. Now, this has happened because some of the strata title owners may have obligation to cover their cash flow situation, may have obligation to pay their debt. So that is why they sell the strata title price at market price. In addition to that, there are still many vacant strata title space in the market, either available for sale or for lease. This has become a challenge for new developers who would like to start launching a strata title building, because we still have a lot of vacant space of strata title building for sale. Now, strata title space owners generally would lease the space at a very attractive rents. And they do that because they would like to optimize their asset and avoid paying service charge. As you can imagine, if you own one floor of strata title space, the kind of service charge that you are obligated to pay is a lot. So now, basically, the strata title owners would like to reduce not paying the service charge by having the tenants pay the attractive rents. Next slide, please. Now, the second half of 2021, especially going into the fourth quarter, companies have gained confidence. Many occupiers have gained confidence, and companies have adapted to pandemic condition. So we see more and more companies adapted, and they're running their business with COVID. So some of them expand by either staying where they are or move to a new building. We still see a trend of companies doing hybrid business models. So when they do that, they reduce, when they renew by doing lease restructuring or lease renewal, reduce their occupied space by 10 to 30%. In the first half, we see one or two even reduce the rent, reduce the space up to 40, even 50%. But the second half, some of them reduce not as high as the first half, because with the COVID-19 is more manageable, PPKM is now reduced to a level of 1. So a lot of companies now, the employees go to the office about 75% instead of 50-50. Hybrid workplace models continue to be applied by many companies. So consequently, they have to redesign their current layouts to be more flexible and collaborative. So there will be more hot desking than fixed desks. So more and more senior people don't have close office. They are in part of the rest of the employees in the open desk situation. Now, what has changed also compared to the first half to the second half now is companies generally no longer perceive relocation as big risk to their business. So this is also good news. In the first half, they're worried about moving, expanding, or relocating because of the uncertainty, not sure about the COVID, but now COVID is more manageable. So they have started to accept current pandemic condition, and some of them decided to execute the relocation plan to a new building if the deal is right. So they're taking advantage of the tenants market because right now the rent could be competitive for occupiers, especially now landlords considers providing a tenant fit-out allowance, which is actually good. So they don't have to, if they don't get any approval for the capex spending when they would like to move, some landlord provide those capex allowance. Of course, it's not for free. Yeah? It is added to the net rent that you have achieved with the landlord on the negotiation, and then some landlord add the interest and also the tax on the top of the fit-out allowance. Next. I'd like to share with you some of the reasons for companies to relocate during pandemic. Number one is they have been in the same building for many years. Now, because they have adapted with the running the business with COVID, they have been in the same building for many years, and then the rent that are offered by landlord with the much brand new building at a very competitive rent and attractive rent, so they decided to take that opportunity and move. And another reason is they move because of the current building situation. So the building that they're in could be in the build-operate transfer arrangement, whereby the tenants are not so safe, are not so sure whether the new owner of the building will still continue the building to be commercial buildings, or how about the management of the building will still be a good quality management or not. So those are a question that which is not answered properly will make the tenants in that building move and relocate, or the building is to be demolished. So even though the market is oversupply, we still see landlords or developers still planning to build new building, but for sure it's not going to be finished and completed very soon. And also they wish to expand, the third reason, their business with caution. As we can see, technology-related business, government, they expand with caution. And also another thing is they have decided to consolidate their operations. They are scattered in a lot of different office buildings, and then because the opportunity right now for the tenant to move and get a good rent, so they decided to move. So this has recently happened during second half of 2021, and we hope to see it to continue in 2022. Next slide, please. So what are the strategies and opportunities for occupiers in 2022? As mentioned early on in the slide, there is an opportunity for occupiers to consider relocation more seriously, taking advantage of the current tenants market. As you can see right in the slide previously by Pak Ferry, the supply in 2022, the new supply in 2022 and 2023 will still be there. 380,000 2022 and 127,000 in 2023. So the tenants market and the oversupply will still be going on. Now, as the office market continues to be tenants market, occupiers have an opportunity to discuss their lease renewal early by restructuring the lease at competitive market rent. And the most important thing is achieve win-win solution between the tenants and the landlords. And another opportunity that we see in the market right now is that there are investors. There may be an opportunity for investors to buy an operating office building or a large portion of operating strata title building at discounted price for their own use instead of continuing leasing, right? So many companies, sorry, not many companies, few of the companies that have been leasing for many years, they have the opportunity actually to buy at a good price instead of leasing, because at the end of the day, it is better to own because you will get the asset instead of continue to be an expense. Now, a majority of companies, when we talk with them, are confident about the Indonesian economy going forward. This is also a good sign for 2022. And this will encourage companies to consider relocating more seriously to a new building. And we expect this high confidence level will continue in 2022. Having said that though, yes, confidence gain, GDP growth, Oxford has predicted in 2022, our GDP growth is 6.8%. If that happens, that will boost up the economy and also boost up the demand for the office space, and hopefully will catch up with the offer supply. Now, 2024, it will be the year where the office market will turn around. Why? Because in 2024 and 2025, we don't see any new supply coming into the market, while the demand for the office space continued to go up because GDP growth continued to grow as well. So hopefully 2024 start to come back and then get better 25 and over the years. That will be all from the office market. Back to you, Auntie.
Thank you, Pak Bagus and Pak Ferry, for the explanation. We're going to move to our next sector, which is residential market. We still have Pak Ferry, who will explain about the market updates, and also Ibu Lenny Sinaga, who will explain about the opportunities in residential market. But before we do that, we have a poll, and we would like to ask your help to fill out the poll question. The first one is, as the expatriate housing market is still currently a tenant market, from your point of view, what do you think the condition of the expatriate market will be? So we'll give another 10 seconds. Okay, thank you for everyone who has been participating. Maybe we can share the results. Okay, so 69% still consider that it will still be a tenant market. So with that said, I'm going to give the floor to Bapak Ferry Salanto and Ibu Lenny Sinaga. The floor is yours.
Thanks again, Auntie. I think I'm quite agree with the result of the questionnaire. This is still a tenants market. Okay, now we are talking about the residential performance in terms of the we have two charts here. On the left side is supply of strata title apartment, which represent about 94% of the total 225,000 units of apartment in Jakarta. While on the right, there's a cumulative supply for office apartment, for service apartment, which only represent about 6% of the total stock in Jakarta. If you look at the figure, starting from 2017 to 2019, it represents a normal market situation where annual supply of apartment are basically in the range of 9,000 up to 17,000 units on average. So in 2020 and 2021, number of units being handed over are quite small, and that's already explained developers' confidence over the market during the pandemic. So limited amount of new units were being handed over to the buyer during that period. As economy projected to grow better starting in 2022, we see that number of projected supply pipeline is higher than in the previous 2 years. But on the other hand, supply of service apartment has been quite limited, and we anticipate about 470 units of apartment being completed in 2022. We are quite positive about the service apartment market going forward, given the positive projection of economy and further number of service apartment will be limited, particularly during the 2023 and 2022. Next slide, please. Okay, now we're talking about the residential performance in terms of take-up rate and on the left and occupancy on the right. As you can see, the absorption rate of strata title has been quite stable in Jakarta, while the occupancy performance of service apartment in Jakarta seems to experience big drop over the last 2 years. Occupancy was registered at 68% in 2019, as you can see from the chart, and plummeted to only 52% in 2021. However, we are quite optimistic about the performance going forward starting in 2022. We expect a gradual increase in occupancy, basically because the expatriate is expected to coming back working here, and also business activity resumes, which means that inquiries for apartment for lease will increase. Next slide, please. Okay, price of strata title apartment, as you can see from the chart, has been quite stable over the last 2 years. Many projects decided to maintain their asking price at this current condition. On the other hand, for the rental rate of service apartment, this is in the same trend, basically with occupancy. Rent has dropped significantly by 8% from 2019 to 2021. Again, we expect to see a rebound in 2022 onward, given a better economic projection. Okay, that's, I think, that's all from me. Over to Ibu Lenny.
Thank you, Pak Ferry. Hi, thank you for joining Collier's webinar day 2 for occupiers. Today, I would like to give our insights in residential and expatriate housing market. As pandemic has not yet ended, the situation remains uncertain for companies. Again, we have not witnessed any big improvement in the market, just slightly increasing in the last 6 months. But last month until now, a limited number of expatriates is coming into Indonesia. You know, as immigration have been restricting newcomers due to the new Omicron variant of the COVID-19, and quarantine changed to the 10 days mandatory quarantine effective on 2nd December. So the expatriates who newly come to Indonesia usually just come for the site surveys before their working period starts. Only very few of them come and start their work right away. So most of them are singles or with their families. Companies have urged them to come alone since it is too risky and too costly to bring a family in this current situation. So if you see in here, this first slide, I mentioned about that, how the future rental landed housing and apartment sector will depend upon how Indonesia managed to reverse the downtrend in expatriate number for the rest of the year. And the second thing, that the rental apartment market should expect another drop in their occupancy rate. I'm sure that you guys, you all already seen what Pak Ferry present. So possibly dropping below the current figures, and then also that that we will see that the self-isolation gas for the service apartment, and then this is gonna maintain the occupancy rate. The last thing, the tenant become more confident to extend their leasing term more than a year. This is what we've seen right now in the expatriate housing market. Next slide, please. So regarding price, it is case by case. In more popular areas, the asking price is still stable, or I've seen that the little bit small rise, while in less popular areas, the price tends to decrease. So many companies have tightened their budget either by limiting the rental budget or limiting the number of family members to come. So as the result, some current expatriates have moved out to the smaller unit too. So you've seen here that the tenant market, we agreed that most of us agreed that the next year still the tenant market, because this market is still very dynamic. So for the tenants or occupiers, we still have more options. So we still have the power to negotiate with the landlords. Okay, so we need the smart negotiation with the landlords, yeah, and then please use the flexibility as an opportunity. So in here also, I put that the tenant need to knowledge of the market, since not everything that occurs in the market is applicable to all expatriate housing owners. So here, even that the tenant market, there are few exceptions for the high demand residential. So not all not on the market, all on the market that the owner give that the discounts, or the flexible. Some of that the high demand property, they more stable on the rental price. So this is that we've seen in the market right now. And then also I can see that the trends, many companies also been starting to minimize their risk. They are becoming more cautious in reviewing their contract in order to avoid any costly incidents in the future. Additionally, they tend to extend their contract with a shorter term. I will say that minimum 1 year rather than a longer term like 2 years. So consequently, owner have to become more flexible to retain their tenants. Next slide, please. Okay, so what's the opportunities in 2022 in residential and expatriate housing market? So we've seen that if the pandemic remains, we predict this current situation will persist. So we can only hope that the market will be able to recover gradually in the middle of the next year after pandemic can be controlled by vaccination. So companies or tenants need to be mindful when the embedding clauses in the agreement. I mentioned earlier that about some companies, that they really like negotiate on the lease agreement, on the clauses on the lease agreement. We've seen also with the unstable condition, some companies allow their expat to have personal agreement regarding leasing. So they prefer using that personal agreement, because all the costs and all about the taxes and everything that will be that the expat handled by the expat, so there is no tax involved to the companies. So as long as that complies with the company's policy, so we'll see that the companies that agree for their expat to have the personal agreements. And then this thing that will continue until Q2 2022. So I put here that it looks like that will continue to be a tenant market. So negotiation on the leasing rates and the payment terms can still transpire with the owner for flexibility. Back again, participants, for occupiers, this is tenants market, and then the owners has to be more flexible on everything, on the payment terms, on the price, and then also on the clauses on the agreement. So that's all from me. If you have any questions, please feel free to contact me or my colleagues. So thank you very much for your time. Back to you, Auntie.
Thank you, Melanie. We're going to move to the next sector, which will be retail market. We still have Bapak Ferry Salanto to explain about the retail market data, and also Sander to explain about the market opportunities. But first, we have a poll. another poll for retailers. So in this poll, I think we have a few questions and we will need your help to fill out the questions. We will give you 20 seconds. So we have 3 questions. The first one is, do you still receive rent rebates? The second one is, do you prefer a revenue sharing rent structure? And then the third one is, are you using the COVID-19 situation to close non-performing stores without having to pay penalties? So we will give you 20 seconds. Okay, thank you for everyone who has participating. Maybe we can share the results. Okay, so the first one is 55% still receive rent rebates. 72% prefer a revenue sharing rent structure, and 69% using the COVID-19 situation to close non-performing stores. So with that said, we'll give the floor to Pak Ferry and Sander. Over to you, Bapak-Bapak.
Thanks again, Auntie. Okay, now we are moving to retail market. Well, I would say that this retail is one of the sectors that hit hard by this pandemic, and we all understand that traffic is the key success of a shopping mall. Since social activity restriction implemented during the pandemic, and it has consequences to reduce number of visitors to the mall by more than 30%. If you look at the chart for Jakarta and greater area, occupancy has been in the trended down since 2018, and it gets worse during the pandemic because quite a few stores has closed down their operation because they cannot survive without limited traffic coming to the mall. And for some years, we see that the growth of supply of retail has been quite moderate in Jakarta and Greater Jakarta, and that's will help increase the occupancy of shopping centers starting in 2022 going forward. And also we expect to see a more loosening policy of public activity restriction, and this is hoped to help shopping center to perform better in 2022 going forward. Next slide, please. Okay, rents dropped a bit last year and became relatively stable in 2022. However, the newly operating Pondok Indah Mall 3 has attributed to the slight increase in rent. Of course, like hotel sector, retail sector with no issue in supply, and that will be much easier to stimulate the performance because it only needs the policy to be able to open their full operation with less restriction. With this condition achieved, we believe there will be more confidence among landlords and tenants to agree on the new rental tariff going forward. And that is why our rental projection is somewhat increase over the next few years. That's all for retail update. I'll give it to Sander to explain further about the situation. Thank you.
Hello, good afternoon, everybody. Thank you, first of all, for dialing into this webinar. I'm going to give a little bit of an overview on the retail market of the last 6 months and a little bit looking ahead to 2020. So as the COVID situation here in Indonesia seems to be pretty much under control for now, and obviously we hope that stays that way, we see that the positivity is really returning into the retail market. For many landlords, it is a relief as well, because rents and service charges could return to normal again. We just saw that still 55% of the retailers in this call at least get rental rebates, but some other rents obviously have returned to normal, but it really depends on the segment that you're active in. And for retailers, of course, it is also good that the positivity has returned into the market, because we see sales numbers increase for many retailers. There are still some exceptions though, as cinemas and also retailers active in the entertainment segment are still not allowed to operate at 100%. So these segments still need support from their landlords in terms of rental rebates and flexibility on payments. As a result of the pandemic, many retailers from all the different segments had to review their portfolio of outlets and close stores, as Ferry has also mentioned. Some landlords are still working on finding replacement tenants in a soft market where retailers know they can get more favorable commercial terms. And so many retailers are getting active again in terms of expansion, really to reap the benefits of this soft market, while they remain to be cautious and selective in the locations that they would take up. And this is also the main reason why we still see a lot of vacancy of retail units at office complexes, for example, where it's much harder for landlords to find new retail tenants, while of course they want to offer their office tenants the facilities that they require. Many retailers, especially in F&B segment, feel that the market is still quite vulnerable, and uncertainty remains if a new COVID outbreak will happen in Indonesia, causing people to work from home again. And so they prefer to open at standalone outlets or outlets in malls over office locations generally. We do feel, however, that if the situation remains to be stable and an increased amount of people will work at their offices again, it will definitely become a good option for F&B retailers to open at office locations again. And I will elaborate a little bit more about that later in this presentation. If we can go to the next slide, please. So positivity in the market, yes, we do feel that there's a lot of positivity in the retail market at the moment, at least compared to last year and earlier this year. Indonesia's sales growth is projected to be positive compared to last year. And although sales is not yet back at the 2019 levels, of course, it's going into the right direction. And luckily, the planned PPKM measures seem to have been cancelled during the upcoming holiday season, which is obviously very positive as well for everyone involved in the retail sector. But we're hoping that the government does not still implement these stricter measurements just before the holiday season. We have to wait and see. The initial idea was to have a level 3 PPKM from 24 December until 6 January. That has been cancelled, but we still have to wait and see whether they will still implement something. But we hope they will not, of course. Mall visitation has also improved quite significantly, especially during the weekends. And most major malls have been very crowded for quite some time now. We see also a lot of positivity on the retailer side, where major international and national retailers are pushing to expand in Jabodetabek and other Indonesian cities like Surabaya, Semarang, and Bali again. They're looking to open standalone stores, serving consumers both off and online. I think I mentioned in the webinar of last July that these stores, these newly opened stores and standalone outlets, will be used as fulfillment centers for online orders as well. And of course, all retailers are also looking at the major malls in these cities to see if they could expand there as well. Another positive signal is the interest of foreign retailers to open in Indonesia. During the pandemic, we saw Taco Bell and Subway, among others, opening as new brands in this country. The market size and the growing middle class in Indonesia are obvious reasons that make this country very attractive for many foreign retail companies that are not yet active here. And they look at the growth and the performance of international and local retailers in similar segments that are active already in Indonesia, and also at retailers from their respective countries, and see that, you know, regardless of the pandemic we had here in the last 2 years almost, most of these retailers are here for the long term, foreign retailers. They continue to expand in Indonesia and also continue to invest. And so that's a positive signal for foreign retailers that they're looking at Indonesia. Next slide, please. So the strategies and opportunities for 2022, as many mall owners and owners of standalone commercial space are still looking for replacement tenants. The market is currently soft in Indonesia, as I mentioned before. And so retailers could reap the benefits and lease space at more favorable terms compared to the pre-pandemic era. For space in malls, this basically means the possibility of getting lower rents compared to 2019, potentially lower down payment percentages, more flexibility on the exit clauses or termination clauses, and kept rent increase in case of a lease extension that can be negotiated up front before the actual agreement is signed. For standalone locations, we see more flexibility from landlords on rents as well, and more flexibility to provide, for example, AC, gensets, and other required facilities by the retailer. And as a result, we see an increase in activity in the market, and many retailers are looking to expand now because there's a lot of supply, and that's obviously a positive signal. The last 2 points on this slide I have mentioned earlier during the presentation, but for 2022, and in case of a continued improved pandemic situation, it is expected that more people will start to get back to their offices to work. Many office landlords, like I said, are looking for F&B tenants to be able to provide a good and strong F&B offering to their office tenants. And so these landlords are a bit more flexible towards potential F&B tenants as well, to make sure they can secure them as a new tenant. In many different office complexes here in Jakarta, there we see good and well-positioned units available. So this is, I think, definitely something for F&B retailers to consider in the coming year, in case the pandemic remains stable as it is right now. And finally, also mentioned, it's very positive signal. I think that many foreign retailers still consider the Indonesian market as one of the top markets to expand to in Southeast Asia. We see retailers from China, from Japan, from Australia and Europe that are contacting us. And so we received an increasing number of requests from these retailers for retail market information and data. And so we're quite confident that more strong and exciting retail brands will open in this country in the coming years, which is obviously positive for the landlords, but also for the Indonesian consumers and the retail market. I think in general, that new brands and strong brands open up here in Indonesia. So these were my updates. If you have any questions, please do not hesitate to reach out. And thank you very much again for joining the webinar.
Thank you, Sander and Pak Ferry. So we're going to move to our last sector for today. It will be the industrial and logistics market. We have Pak Ferry Salanto and Pak Rivan Munansa to explain their view on the industrial and logistic market in 2021 and the opportunities in 2022. But again, our last poll for today, hopefully everyone can join to fill out the questions, the poll survey. 2 questions we will give to 20 seconds. The first one is, other than Greater Jakarta, which is already well established, which area do you consider will have the potential to develop in the near future? And then the second one is, from your point of view, what would be the most important requirement for a good industrial estate? You can have multiple choice for both. So we're going to wait for 20 seconds. Okay, thank you everyone for answering the poll. These are the results. So for number 1, oh, it's a tie. It's a tie, still West Java and Central Java with 46%. And for number 2, what would be the most important requirement? 68% still answer location. So with that said, I'm going to hand over the mic to Pak Ferry and Pak Rivan. Over to you, Bapak-Bapak.
Okay, thanks again, Anti. Okay, we are talking now about the industrial sector. Of all the overall property sector we cover, we believe industrial sector will have more traction to grow faster, despite the overall land sales performance that has been relatively low. But we see the pent-up demand is high, particularly because quite a few companies have yet to decide expansion this year. This year's sales performance, as you can see from the chart, are mainly driven by the transaction from automotive sector. For the last few years, the high-tech sector has been quite active. This year, main sales are coming basically from Hyundai EV, which will produce electrical battery. Besides that, we also see that data center sector has also quite active during 2021. And this is basically a continuation of the trend over the last 2 years. The east part of Greater Jakarta area are still the most attractive area for industrial tenant, mainly because the accessibility and the infrastructure quality provided by most of the industrial estate. We also see some industrial estates in Bekasi and Karawang still become very attractive in getting tenants, but the other areas has also been favored location too, depending on the type of the business sector. Next slide, please. Okay, if you look at the left chart for industrial land price, you might be surprised why price increased during the pandemic. Price increased during the pandemic, but in general, price has been stable over the years. The increase here is happening because of the adjustment of some industrial estate with good sales performance, but their price is relatively lower than any other industrial estate located in the same region. So basically, they are trying to catch up with the other industrial estate in order to be in the same level because they are in the same area and same quality of the infrastructure. And in terms of tenant, we anticipate there will be more and more inquiries still coming from automotive industry and for sure the data center. This will be elaborated by hopefully by Pak Rivan after this. Aside from those sector, of course, most industrial sales activity will also be underpinned by the traditional sectors that still survive until now and perform better during the pandemic. This includes logistics sector, mainly because of the growth of e-commerce business, the chemical industry, food for sure, health, pharmacy, and fast-moving consumer goods. Thank you. Over to Pak Rivan.
Okay, thank you, Ferry, and thank you everyone for joining this webinar session. In this opportunity, I would like to give a bit update about latest industrial market condition. So, as already mentioned by my colleague, in general, you all know that the pandemic condition is getting better right now, especially for industrial. It is good that now people can start fly in and out from Indonesia, regardless of the quarantine policy. And as explained by Ferry, that even though right now the industrial land sale is still relatively low and flat, but we can see toward the end of the year, there is a sign of a recovery. We believe, we hope that as long as there's no third wave pandemic, the 2022 industrial outlook should be positive and improving significantly compared to 2021. Next. Okay, in terms of the development, based on our observation, the development of industrial estate are still focused in Java area, Java Island. Why? Because especially in West Java, most of the developed infrastructure such as toll road, connectivity to seaport, connectivity to city center, connectivity between international standard industrial estates are mainly, located in the West Java. Second is about the skilled labor. Since Bekasi, Karawang area is already well developed, the industrial estate is actually provide enough workers, which is already trained good, because as a automotive center area, they have a training and everything. So we have a lot of skillful labor, as well as they work more efficient compared to other area. However, of course, the downside is the minimum wage is also higher compared to other area. The other one is international seaport. Is very important for manufacturing as well as logistics. Tanjung Priok is still the most developed seaport right now, followed by Tanjung Perak in Surabaya, and potentially Patimban, which is already first phase being launched by the government in Subang and West Java. So in terms of potential area to be developed as industrial estates and has enough land bank, let's say in Cikarang, West Java, Cikarang, Karawang, Purwakarta, Subang, and Patimban, there are plenty of potential industrial estate to be developed. As for Central Java, example like Batang, Kendal, Semarang, this is there is a new trend that people that is looking for labor-intensive type of industry, they will aiming to be located in Central Java. And as East Java, the development will be, Gresik at the north part, Lamongan, Tuban, and then south part will be Pasuruan, Sidoarjo, and Ngoro. The other thing is in Java, basically, we can also find established industrial estate with a special economic zone. As I understand that several industrial estates applied for the kawasan ekonomi khusus or special economic zone. I know that like kawasan industri Kendal in Semarang, in Kendal already got the special economic zone, as well as kawasan industri terpadu Batang, which is already backed up by the government, is on process, as well as GP in Gresik area. Other potential area also that we see still for labor intensive is Brebes, even though it's still far from developed industrial estates. Okay, next. So in general, regarding the current market condition, the demand for data center is still ongoing in the market and is quite high. As we can see from the charts that the internet users in Indonesia are increasing from time to time. So as a result, the data center are still searching for the right property. And for the location, you can see from the charts that data center is still pretty much concentrated in Jakarta and West Java, especially Cibitung to Karawang area. This is due to the establishment of the existing data center infrastructure in this corridor. Okay, next. Okay, the other thing that we see in the market is there is a traditional warehouse, logistic operation, and demand for fulfillment center. Unlike the demand for industrial plot, the demand for warehouse space, either traditional or modern warehouse, is increasing from time to time, regardless of the pandemic. It comes from the FMCG, e-commerce, and the end user, such as factories. And recently, we see the increased demand for automation from FMCG companies. Traditional warehouse usually using the selective racking type system, which is there's a requirement from the FMCG to replace it partly with the radio shuttle or the automation racking system. Actually, by using this automation racking system, they can be more efficient in terms of the occupying the premises, because they will not heavily rely on people to operate it manually, and they end up with less space, warehouse space, compared to the traditional. However, of course, at the beginning there will be a heavy investment, but in the long run, it actually will make the logistic costs more efficient and stable. The other thing is fulfillment center and versus courier or express. As we know, e-commerce, their business model is C2C, but we start to see that e-commerce starting to change a bit their model, which is become B2C, because in that case they can then they will need a fulfillment center, in which by having this fulfillment center, they can make sure that the delivery of goods to customer will be on time and they can control the service quality. However, we have seen also in the market that the express or courier companies also start to doing or expand their service not only for courier but also act as a fulfillment center. So we have seen there's an overlapping between these two. As a targeted area would be still for e-commerce is in Bekasi on the east, and on the south is Jalan Raya Jakarta Bogor. And recently we see there's a significant demand also in the west of Jakarta, which is Dan Mogot area. This is in line with the location of e-commerce customers and also the highly population area. Next. Okay, the last one is the industrial estate that are supported by the government will be attractive to new investment in Indonesia, especially when we are competing with other countries in the region, such as Vietnam. Industrial estates such as, for example, like Kawasan Industri Terpadu Batam, which is supported by the government, offers a very competitive and plan cost and in terms of payment. We understand that they have a schedule that you only pay a certain amount of down payment and you will pay the remaining payment at the beginning of year 6. So it is very attractive. And this industrial estate also has a good infrastructure because it's backed up by the government. And also special economic zone, which is this status will be a benefit to investors, because for a certain industry there will be a tax holiday applied according to the list provided by the government. So that's pretty much from industrial. I will give it back to Andy. Thank you.
Thank you, Pak Rivan, and thank you also, Pak Ferry. I think it's time for us to have a question and answer session. I will start with the very first sector. For Pak Bagus for office sector, Pak Bagus. Let me check. Is there any effect on the office leasing market with companies having hybrid working arrangement, Pak Bagus?
Yes, thank you for the questions. As I have mentioned previously in the slide, a lot of companies applying hybrid workplace models. So due to this, they have actually already majority of the company reduce their space, their occupied space when they renew the lease. So this is already in anticipation of the impact of the pandemic. So because of that, right now the while on the other hand, the new supply of office will still continue, as you can see in the previous slide, in 2022 until 2023, and then the reduction of the space is there because of the hybrid business model. So the impact is actually the recovery of the office market will be more challenging and will take a longer time. Now, however, having said that, in end of 2021, we already start seeing more and more confidence from a lot of different companies in terms of doing their business with COVID. And then it's likely to continue in 2022. And then we hope to see GDP growth is growing. So the impact is there because of the downsizing of many companies. However, with the possible stop of supply in 2024 and 2025, so far we've seen there is no more supply. So the condition will start to meet into the balance between supply and demand, and will start to come back from 2024. So, and then overall, the hybrid model, if it will continue in the long run, will still be okay and manageable, because as long as the company is the GDP growth is economy is growing, I don't think the issue of hybrid business model will be as challenging as right now. Right now it is challenging, but over the long run, with the economy growing, demand for office space growing, things will be more manageable and better. We all believe that. I believe that personally.
Okay, let's hope so, ya Pak Bagus. Thank you for the answer. We're moving on to the residential or expatriate sector. Ibu Lenny, in this current situation, Ibu Lenny, which type of housing would expatriates prefer more? Is it landed houses or service apartment? Because I think the pandemic situation kind of give an effect on the preferences, and is it going to be still the same way in 2022, Ibu Lenny?
Okay, thank you, Auntie. Thanks for the question. Well, we'll see in the 2022 that will be well, starting that from the pandemic, actually, that we already seen that the most of the companies prefer to put their expat in the apartment. Okay, because they're coming with that, like I mentioned earlier, and also then in the previous webinar, they're coming that single or couple. It's very limited that coming with the family. So that's why that the company put them in the service apartment, either service apartment or apartment, unserviced apartment. So 2022, that was still the preference, that's still that the apartment or service apartment. But if I what I predict, like it will continue until mid 2023, this trend, because in terms of the costs, you know, and then also for the company, with this economic situation, it's very important if they're coming without the family. So preference that single or the couple. Yeah. So that's my answer, Auntie.
Thank you, Melanie, for the answer. And we're moving on to retail sector for Bapak Sander. Sander, in terms of the online market condition and how tenants move to online business model, how would you, what is your opinion in terms of the brick and mortar kind of type of business center?
Yeah, I think before the pandemic, if you look at the online sales in Indonesia as compared to the total retail sales, it was below 10%. Now that after the pandemic started and during the pandemic that grew, we don't have the exact numbers, but they estimate it's about 20% now. So it increased a lot, obviously, and a lot of that will remain to be online. I think more people got used to shop online and all that, but regardless, I think brick and mortar stores will continue to play a very important role in retail. And you also see that, for example, in the US, where a lot of pure online players starting to open up brick and mortar stores or acquiring existing retailers, and so cooperate with them and also to have an offline presence. So I think if you look at what they always say, the omni-channel strategies, that's really a combination of both on and offline. And so retailers will continue to be present offline, and of course also need to have a presence online. And if you look at new stores and retailers here in Indonesia, a lot of them are considering or already doing it, using their outlets, standalone outlets, as online fulfillment centers. And so I would say the combination is what you need as a retailer, and the two strengthen each other. Yeah. So brick and mortar will continue to play an important role.
Okay.
Also, sorry,
Yes.
I saw I forgot to mention about the revenue sharing. I saw in the poll that about 72% of the retailers prefer to have a revenue share structure.
Correct.
So it's interesting. Yesterday we had the webinar for investors and developers and owners, basically, and the results were the other way around, where you see that a lot of landlords prefer not to have a revenue share structure yet, but prefer to continue to get a normal base rent and service charge. So that's an interesting dynamic. We indeed hear from a lot of retailers that they prefer to look at revenue share at the moment, but it's a complex thing because a lot of landlords prefer not to do it and have difficulties, for example, with online sales. So if someone orders at Gojek or Grab and that order is fulfilled in the store in a mall, for example, the question is whether that's part of offline sales or the store sales, or if it's part of online sales. And a lot of retailers will obviously argue that it's part of online sales, and so that the percentage revenue share that they pay is only based on the sales in the store. So there's a lot of things that still need to be thought about and sorted out between landlords and retailers. I fully understand that retailers, especially what has happened in the last 2 years, prefer to look at revenue share to divide the risk between the landlord and themselves. And so I believe that slowly but surely, going into the future, it will be something that is going to be more accepted also by landlords. But again, there's still things that need to be discussed and thought through before we get there. But in general, I see also from Europe, you see that actually landlords get more involved once there is a revenue share, because it's important that their malls, the visitation at the mall stays high, and that the stores make a lot of sales, of course. And so in the end, oftentimes it's also could be positive for landlords as well in terms of their income. But there's many different structures in terms of revenue share. You could have a lower base rent and a percentage revenue share, or 100% revenue share. Anyway, it's something that's coming in Indonesia in the future, I'm sure.
Thank you, Sander. Thank you for the explanation. The last sector will be industrial, Pak Rivan. How about the projection growth of data center in Batam area, Pak?
Yeah. So far we heard about Batam, but honestly speaking, the realization of the transaction in Batam is actually we haven't have the confirmation on the real transaction over there. As I explained, most of the data center would like to be in the same area with the other industrial estate, with the other data center that already established in that corridor, and usually it is at the location where the Cibitung until Karawang area. So there is a future which is in Batam, but I haven't seen that's really happened in the market. Okay.
Okay, Pak Rivan. Thank you, Pak Rivan. And then second question, Pak Rivan, is there any potential for fresh fulfillment center demand?
Yes, as I explained, actually west of Jakarta is actually there are a lot of requirements which is for fulfillment center, and also south of Jakarta is. Those are the two areas that we heard in the market that actually looking for a fresh fulfillment center.
Okay, Pak.
Yeah.
Okay, I think that's our last question for today. Thank you, Pak Rivan, and thank you everyone who is joining the webinar today for the occupier session. Do not forget that tomorrow we will send you the presentation slides as well as the recorded version of the webinar. And do not forget, you can always reach out to our experts here. And if you're willing to, you can scan to access our reports, and then we will make sure that each quarter we will update you with our most recent market reports. So we'll see you in July 2022, and until then, stay safe and healthy. And thank you, everyone. Bye-bye.
Thank you. Bye.
Thank you.